What is going on, everybody? Jonathan here with Gig Nation, checking in here. I'm actually waiting for an Amazon Flex block. I'm about to do some fresh grocery deliveries. I showed up to the Whole Foods and they don't have any groceries ready yet, so I'm kind of chilling here, and I figured I'd do a video because this is a topic that I really wanted to do a video on and I just didn't have any time. So I'm going to see if I can kind of knock this out real quick here. And maybe you've seen the news already, but basically yesterday GrubHub released their earnings. They missed on sales and they gave a really weak forecast for this upcoming holiday season. Their stock got cut almost in half. It lost 40%. It was a crazy drop, and it's been another blow to the gig economy. We've seen Uber struggle, we've seen Lyft struggle, we saw Postmates push back their IPO, and now GrubHub released some really interesting news. And so I'm going to go into detail about what this means for the gig economy as a whole. But before I hop into that, make sure that you've joined the Facebook group so we can talk about all of this stuff. I'll leave a link down there. And also check out gigsharks.com. I've been working really hard on this website, and it helps you find all the best gigs and app jobs in your area. Okay, so let's get back into GrubHub earnings and what this could mean for the gig economy. So GrubHub actually made a really interesting note in their financial statements, and basically they said that the reason why they missed on their earnings is because diner food delivery customers are basically spreading their business across multiple apps. And what we're seeing is every app is just offering crazy amounts of promotions to try and bring in new diners. They make it almost free to get your food delivered. A lot of times it doesn't cost any money. And so I've actually been kind of experimenting this myself. I actually don't like to spend money on getting food delivered. It's kind of like a luxury that I don't see a real reason to want to spend money on. But I wanted to kind of experiment with this, and what I found out is that it's not priced like a luxury. It's actually sometimes cheaper than just buying food normally. So not only can you get promo codes for free delivery, but let's say I want to go pick up my food that I order through DoorDash at the restaurant. DoorDash might throw me a promo code for $5 off that, maybe $7 off it. I get special ones for Chipotle where it's like $7 off a $12 order if I go pick it up. So there's no additional fees. They're just discounting my food at Chipotle by $7. And there's all these deals just to bring me onto the platform. But everyone is also, throwing out their own good deals. So Postmates will have one, Uber Eats will have one, GrubHub has one. Actually, it's pretty funny. GrubHub mentioned this in their financial statements, and then right when I was about to start this video, I got an email from GrubHub that said $15 off your order of 20 or more because it's Halloween. So they noticed that they have to compete with these promotions, but they're not really changing their strategy. It seems like they kind of just have to keep throwing out these promotions. So what does that mean for the gig economy? Well, food delivery is something that traditionally has been a luxury. Now these apps have made it affordable to everyone, so anyone can get their food delivered. But how are they doing that? Well, they have a ton of venture capital funding. A ton of people are pumping money into these companies, hoping that when they IPO'd, when their stocks came out, that they could get that back. And a lot of those initial investors probably made some good money when these stocks did IPO. But what we're seeing with these companies is that they can't really retain customers. They can't retain these diners without continuing to throw promotions at them. So people don't really want to pay full price for food delivery. And at some point, they're going to have to. I mean, what we're going to see is basically a battle of promotions. So we're probably going to see these companies continue to throw out good offers and basically just deplete themselves of cash, do as much as they can to continue retaining customers, because that's the big thing here, total revenue of orders, total customers that they have with their app. But this can't go on forever, because now that these companies are public companies, all they can really do is try and outlast each other. So eventually what we're going to see is the smaller ones, potentially like GrubHub. I hate to say it because I love delivering for GrubHub. It's like my favorite company to do deliveries for. But we're probably going to see companies like GrubHub, kind of deplete their cash to an extent where they just have to try and grab as much of the market as possible and make themselves look good so they can try and get acquired. Maybe someone like Uber Eats will step in and buy GrubHub. But at some point, this all has to kind of come to an end, and this war on prices, this war on promotions is going to end, and we're going to see normal prices for food delivery. And then the question is, do customers still want to get that food delivered? Is it still worth it for them? And who is going to innovate? Who is going to get ahead of the curve to actually bring down the price of that delivery low enough so that customers will be interested in it. Because what we're seeing is that customers don't actually want to pay full price for food delivery, and they're not going to. They're just going to jump to the next app that offers a better promotion. So unless companies like DoorDash can kind of innovate and automate some of this delivery, or what DoorDash is doing with DoorDash restaurants, really pushing these facilities where multiple different restaurants can all cook food in one low cost unit and then distribute from there. Maybe there's some efficiencies there that are making this more scalable at lower prices. We're really going to see forced innovation, and some of these companies might get acquired, might not be around for that long. And with all that said, I personally really hope that GrubHub doesn't get acquired, especially not by Uber Eats, because I really like delivering for GrubHub. And when these companies start consolidating, then the biggest players, the ones that happen to kind of pay out a little bit worse, tend to be the front runners, and then you just get a worse situation for drivers. It's not going to be as beneficial to be a delivery driver anymore, and I'd really hate to see that. So I'm really pulling for GrubHub. I hope they make it through this. I hope that they find a way to kind of keep offering what they're doing, because they do pay out really good prices to delivery drivers. If you enjoyed this video, make sure to hit that like button and subscribe to the channel for all of the latest gig economy news and updates.